Hey there! Today we're going to talk about the fascinating and complex world of global banking. With over 30,000 financial institutions worldwide managing staggering amounts of wealth, it's no wonder banking can seem like a mystery to many people. In the United States alone, the top 10 banks hold over $25 trillion. But did you know that banking was originally conceived as a way to make life easier? Let's take a trip back to the 11th century, when Italy was the hub of European trade. Traders from across the continent would gather in the city of Pisa to do business, but they faced a major obstacle. There were too many different currencies in use. There were 7 different types of coins, which made it difficult for business owners to exchange their money. The solution? They started exchanging goods and services on public benches, which is where the term bank originated. However, as trade continued to expand, new challenges arose. Travel hazards, fake currency, and trouble acquiring loans all contributed to the need for a different method of doing business. This led to the invention of cashless payments by Genoese merchants and the extension of loans by pawnbrokers. Soon, Europe was crisscrossed with banking arteries, with institutions lending money to everyone from the Catholic Church to European monarchs. But how do banks work today? Simply put, banks manage risks. They serve as safe havens for people's savings and earn a modest interest rate in exchange. They then lend this money to borrowers at higher interest rates, but with the understanding that some borrowers may default on their loans. It's a calculated risk that's vital to our economic system, whether it's used to fund consumer spending on goods like cars or the expansion of enterprises in the manufacturing sector. Banks also profit from providing other financial services, such as cash management, custodial services, currency exchange, credit card processing, and more. However, the primary issue with banks today is that many of them no longer focus on serving their original purpose of providing long-term financial solutions. Instead, they often focus on meeting immediate financial needs, which can lead to risky financial constructions that are not well understood. This was painfully evident during the 2008 global banking crisis, when banks like Lehman Brothers extended loans to virtually anyone who wanted to purchase a home, putting the bank in a highly precarious risk position. This amounted to nothing short of gambling and caused widespread economic and social devastation, as the collapse of the housing market in the United States and portions of Europe caused stock values to fall and billions of dollars to vanish into thin air. As a result of this crisis, the banking industry has been governed by new rules, such as mandatory bank emergency funds, to soften the blow in the event of another financial crisis. However, the financial lobby has been successful in blocking several pieces of strong new legislation. This has led to the rise of new investment banks and alternative financing mechanisms, such as credit unions and crowdfunding. Credit unions are organizations that require an annual membership fee but offer no commissions on transactions made. As a result, they have an incentive to prioritize the needs of their customers or credit union members, rather than maximizing profits for themselves. These cooperative movements have been around since the 19th century, offering the same banking services as traditional banks but with a stronger emphasis on creating shared value for their customers. Crowdfunding has also grown exponentially in recent years, with potential platforms facilitating the acquisition of loans from aggregations of small investors, negating the need for a financial institution to act as a go-between. Kickstarter and Indiegogo have been the seed for many new tech startups, with backers investing in concepts they believe in and feel good about, while reducing their exposure to loss in the event that the project fails. Lastly, microcredits, consisting of numerous extremely tiny loans, are another tool for helping the poor of emerging nations lift themselves out of poverty. They provide individuals who were previously overlooked and denied the capital they needed to launch a business with an opportunity to start one. The provision of microcredits has developed into a multi-billion-dollar industry in recent years, giving hope to many who previously had none. In conclusion, banking is essential to our culture and must be implemented, but we get to select who will do it and how in the future. While the global banking system may seem complex, it's important to understand how it works, how it affects our lives, and the alternatives available to us. Whether you choose to use a traditional bank, credit union, crowdfunding platform, or microcredit provider, it's important to consider which option aligns with your values and financial goals. And remember, whether you're a business professional or just starting out, understanding the world of finance can help you achieve your financial goals and lead a more fulfilling life. Be sure to like, comment, and subscribe to Daily Bread for more fun, easy, and humorous finance videos.